a week ago, I gave some advice to Awel Schreiber, who is a Kenyan living in the UK. And days later, she called me and told me that she was so grateful because nilimfungua macho, because it turns out that the advice I gave her is financial, it's life-changing financial advice. So she called me to say thank you. And then so today, as I was just chilling here, I realized that I should come here and tell you the advice that I gave her, because I realized that a lot of us might be in a similar situation and we do not know. So let me tell you what happened. So this advice is related to people who are in partnerships or people who are married and one of the partners has life insurance or they are insured. So this was Schreiber, as I said, she's a Kenyan living in the UK. And so she saw me talking about the importance of buying whole life insurance or getting whole life insurance, especially for those of us who have children. And so she set up a free discovery call. We had the conversation about why she should get whole life insurance. And eventually she ended up buying a whole life insurance cover that would leave her two kids, who are her beneficiaries, 50 million shillings. So she was very, very excited about that life decision, and I was also very excited for her. First of all, before I go any further, just in case you're new here, let me explain what is whole life insurance, or rather why we buy whole life insurance, and then I tell you the story. So why do we buy whole life insurance? The main reason, or the primary reason why we buy whole life insurance cover, it is to protect our beneficiaries. So our beneficiaries may be our children, our spouses, our nephews and nieces, parents, siblings, or anyone else who depends on your income for survival. So if someone is a parent, your kids depend on you fully for survival. They depend on your income fully for survival. And for those of us who provide for our parents, siblings, nephews and nieces, or who support our extended family members, those people depend on your income partially for survival. So usually the question is, if you passed on prematurely, what would happen to the people who depend on your income for survival? So because we are specifically talking about this 34-year-old lady, so for her, because she has two children, if she passed on prematurely, what would happen to her kids? Like, how would her kids pay school fees? How would they buy clothing? How would they buy toys? Where would they get the money to buy or to do everything else that a child needs to do in order for them to develop fully, to become a fully functional adult? So she understood that if she passed on prematurely, she needed to leave X amount of millions for her children so that they can continue their lives uninterrupted, at least financially. So this was Schreiber understood the importance of buying a whole life insurance cover, because she wouldn't want to leave her kids stranded. Because what happens in our Kenyan society, when a parent dies, or when two parents die, what is likely to happen to your children is that your kids are going to be tossed from one home to another. One time they're leaving the grandparent, another time an auntie, another time an uncle, sometimes a friend, sometimes a neighbor. And worse still, we find situations where, because everyone, if no matter how much your family members love your children, they will say, we love your children so much, so let's say this lady passes on, their relatives are likely to say, we love your kids so much, but even if we love them, we do not have the financial muscle to provide for them. And so sometimes in worst case scenarios, we find kids ending up in children's homes because no one can afford to take care of them. So this Will Schreiber therefore bought a whole life insurance cover so that if God forbid she passed on prematurely, she will be able to leave 50 million shillings in total for her two children. And the way a whole life insurance cover works is that if you pass on, your kids are not paid that amount of money in installments. They are paid that amount of money as lump sum. So yes, if she passed on 2 years from now, 5 years from now, 7 years from now, 10 years from now, God forbid, whenever, her kids are going to be paid 50 million shillings in lump sum. And better still, her kids are not only going to be paid the 50 million shillings, they're going to be paid more than 50 million shillings, because the insurer also makes sure that to protect that 50 million shillings or to protect that amount of money that it's usually called the basic sum assured, to protect that amount of money from inflation, or to make sure they preserve the purchasing power of that amount of money, they pay bonuses. So these bonuses, or this bonus is usually 2 to 2.5% of the 50 million shillings for every year that this lady is going to be alive, because we are specifically talking about this 34-year-old wealth triber. So because she bought a policy that makes sure that if she passed on prematurely, she would be able to leave her kids 50 million. So we do 2.5% of 50 million shillings. That is 1.25 million shillings. So 1,250,000. So for every year that she's alive, her insurance cover would earn bonuses of 1,250,000 every year that she's alive. So for example, if she's alive for, let's say, the next 10 years, that is another 12.5 million. So 10 years from now, that cover would be worth 50 million plus 12.5 million. Now that you understand why we buy a whole life insurance cover, let me tell you the advice. Okay, so what life-changing advice did I give her? Before I tell you, let's look at how does her full cover look like. So first of all, she's a 34-year-old female and she's a non-smoker. I'm mentioning that she's a non-smoker because it is more expensive to insure a smoker than it is to insure a non-smoker, because smoking has health effects, so an insurer will charge you more to insure you if you're a smoker. So a 34-year-old female non-smoker, she took a cover that she's going to be paying for the next 15 years. So how long she's going to be paying for the cover is the next 15 years. We have different options. You can decide to pay for your whole life insurance cover for 10 years, for 20 years, for 15 years, up to the age of 60, up to the age of 65. But for her, because she's in her early 30s, a 15-year cover makes sense. And then she is going to leave, if she passed on, she's going to leave her kids 50 million. And then she also added 2 more things to her whole life insurance cover. And these 2 things are usually optional, but they are equally important. So she added a critical illness cover, a 5 million critical illness cover. So the 5 million critical illness cover is for her, because as I said, the 50 million shillings, it's for her children. So it's her children who would get that money if she passed on, whether prematurely or if she passes on in old age. That is a gift she was buying her children. But then she added a 5 million critical illness cover for her. So the way this works, a critical illness cover, the way it works is that if God forbid you get diagnosed with a critical illness, and examples of critical illness, stroke, major organ transplant, cancer, kidney failure, and the like. So if God forbid she got diagnosed with a critical illness, she would get paid the 5 million shillings, and then she would get to decide whether she wants to seek treatment in Kenya or in diaspora, which is where she lives. So critical illness. The second thing she added to her cover is accidental disability. So she added an accidental disability cover of 5 million. So the way this one works is that in full it's called accidental disability stroke death. So how this one works is, if God forbid she ever got involved in an accident, and accidents are many. For example, boda, you're in a car accident, you got hit by a car. I even recently was talking to this gentleman who works in a garage, and he told me that his work is so dangerous in that he deals with dangerous machines every day. So anytime it can happen to him, where a machine, for example, chops off all his fingers and he ends up with a disability. So the way accidental death stroke disability works is that if God forbid you get involved in an accident, if you end up with a disability, you get paid that money. So for her, she gets paid the 5 million shillings, and then she gets to decide how she's going to use that money. Because when you have a disability, you need some form of income replacement so that your life can continue. But if you pass on from the accident, it is your beneficiaries who get paid that 5 million shillings, for example, in her case, the 5 million accidental death stroke disability amount. So now, in summary, the main reasons why we buy a whole life insurance cover is, number 1, to protect our beneficiaries. Especially if your beneficiaries are kids below the age of 18, you need to ask yourself, what would happen to them if you pass on prematurely? So you buy a whole life insurance cover to protect kids below the age of 18 from your premature death. But then if the people who are your beneficiaries are above the age of 18, when you buy a whole life insurance cover, what you're buying is a liquid inheritance, because now they're above the age of 18, you don't necessarily need to protect them. What you're doing is that now you're leaving them a liquid inheritance. So for example, if you're a parent who has a 3-year-old, if you buy the cover now, between now and the next 15 years, it is protection. After 15 years, that child will be 18, so that will be a liquid inheritance. Alafu sasa, for yourself, you will be buying a critical illness cover and an accidental disability cover. Now that all of us are on the same page in terms of understanding why we buy a whole life insurance cover, now let me tell you the life-changing advice that I gave this wealth triber. So what did I advise her? So remember, she's a 34-year-old woman who bought a 50 million whole life insurance cover for her children and a 5 million accidental disability cover for herself and 5 million critical illness cover for herself. So how much does that cover cost her every month? That cover costs her 31,205 shillings per month. That is how much premiums she needs to pay for this cover. Remember, she's 34. It is important for me to say this because life insurance is a factor of age. So the older you are, the more expensive it is to insure you. The younger you are, the cheaper it is to insure you. At the same time, the covers can be customized to your budget. So it can be 10k per month, 3k per month, 15k per month. It doesn't matter. It depends on your budget and also depends on your age. So the reason this cover is costing this wealth triber 31,205 shillings per month is because she wanted to leave her two children 50 million shillings if she passed on either in old age or prematurely. So now, that being said, what is their life-changing advice? So a few days later, after she bought this cover and she was very proud of herself for this life-changing decision, we were having a conversation and I asked her, because she had shared that she's married, so I asked her, does your husband also have a life insurance cover? Is your husband insured? And so she told me her husband isn't insured, doesn't have a life insurance cover, but the husband is helping her pay for this cover, this 31,205. So they are splitting the cost. The husband is helping her pay for the cover, and so she's happy about that decision. So in as much as that sounds very cute, in that her husband is helping her pay for these monthly contributions towards her whole life insurance cover, I made her realize what that means, or I gave her a different point of view. And this is what I told her. So by having this whole life insurance cover, by having your life insured as the 34-year-old wife or partner, it means that if you passed on prematurely, let's say if you passed on 5 years from now, it means that you would leave your two children with 50 million shillings, and we can think of it as splitting 25-25. But because legally you cannot give children who are below the age of 18 50 million shillings or like such an amount of money, what it means is that if you passed on prematurely, you would leave your husband with the 50 plus million shillings because of the bonuses to take care of your children. Mnanipata? If she passed on prematurely, she would leave her husband with more than 50 million shillings to take care of their children. And of course, as I said from the very beginning, that was a smart financial decision, insuring herself to protect her children. But let us flip the coin. So I asked this wealth triber, let's flip the coin. What would happen to you if your husband passed on before you? Now that your husband is not insured, what would happen to you if your husband passed on before you? How much money would he leave you to take care of your children if he passed on before you? And that's when it landed. You know, that's when she realized what I was trying to tell her. She's insured, the husband is not insured. So in as much as she made her a good decision, she's vulnerable. That's the reality. So, and remember, I'm not saying that the husband is a bad person, you understand, because I mean, he was willing to help her pay split the bill, the 31,205 bill for her insurance cover. So he's a supportive partner. It's just that they didn't know that both of them need to insured. They actually thought they are making the right decision, because I even remember when I was having that call with her about the whole life insurance cover she was getting, the husband was, you know, somewhere in the background, so he could hear us making all these plans, and so he knew it was not being done in secret. So I told her, go back and have this conversation with your husband. Explain to him what I've just told you. And the beautiful thing is that because he was a supportive man from the very beginning, he understood what it means. He understood what it meant that if he passed on before her, he would leave her in a vulnerable situation. So he also got insured. And yeah, statistically, women live longer than men. So as a woman who is thinking about getting a whole life insurance cover, if you are married, yeah, also talk to your husband about getting himself insured. And it's very important, because then by having your husband insured, you're protecting yourself. Because I have always thought about, in a household where there is wife, husband, children, and now this is for both, men and women. If in this household both of you are contributing an income in order to run that household, you should always think about what would happen to me if my partner passed on. What would happen to me financially if they were contributing X amount of money? Ask yourself, where would I get that kind of money, so that it can be some form of economic replacement when they go. Sawa, make sure that you're not one of those people who end up having to start like very random side hustles because your partner passed on. And there's nothing wrong with starting side hustles. It's just that you want to buy whole life insurance cover, and you also want your partner to have a whole life insurance cover, so that when they pass on, because as I said, when it comes to this life, all of us are on the same journey. It is a matter of when and not if, so that when it happens, at least you give yourself a fighting chance. Because ukiachua 50 million, ukiachua 75 million, if ukiachua 10 million, whichever amount of money, even if it's 5 million, you're giving yourself a fighting chance because you have the money. And beyond that, you are giving yourself an opportunity to be able to grieve them, because it's harder to grieve your loved ones or our loved ones when we don't have the money. Okay?